hello everyone. So it's a session and then it's drinks, so we'll try to keep it interesting. So welcome everyone. We are going to be talking about from banks to blockchain, DeFi disruption, and we have three excellent speakers today. First of all, I'd like to just start things off. I'm your moderator, Linda Montgomery. And who am I? I've been in tech for most of my career. I've been in the area of blockchain and digital assets since 2017. I've had the opportunity to launch many companies in this Web3 space in that time, and both here and also in internationally. And I'm a growth consultant. I work with lots of founders, helping them with startup issues and scaling their companies. I'm a partner with a Web3 VC fund, and I'm also board chair of North Star DAO, which is a new not-for-profit based out of Toronto. And we want to be providing education on emergent technologies in Web3 and also working with policymakers, being part of our other great groups working with policymakers. So just to start things off, I'm going to introduce, we're going to get to these speakers, but I know a lot of you are very knowledgeable in this space of DeFi. I just think it's important for those that maybe aren't so knowledgeable just to set the stage of what are we talking about here when we say DeFi. So we're talking about decentralized finance, and I think the easiest way to understand this is to think about centralized finance or traditional finance, CFI, TradFi, as we're going to refer to it, and basically we all interact in this ecosystem today, and it is characterized by centralized authorities that control assets and the flow of money. And so think of banks, brokerages, credit card companies, etc. So we know there's a lot of inefficiencies. It's complicated. It's expensive. There's databases and servers that are based, some of them on when finance got digitized in the 1970s and 1980s. And so with the blockchain, we have blockchain technology. We have cryptography. And also smart contracts and applications, or DApps, that define what decentralized finance DeFi is. And basically, it's like financial Legos. And it lets us it enables us to facilitate a lot of the applications that central finance has, payments, borrowing, lending, trading, insurance, you name it. And then we're able to leverage a lot of the benefits too, which, and we've talked about many of these today, like streamlining the whole process, making it more efficient, less expensive, more transparent and open, tamper-proof benefits, of course, enabling equality and access. So just a little primer on that. And so without further ado, I'd like to now introduce our great speakers. We have two founders of some great innovative Canadian companies, and also when we talk about decentralized finance, we need to talk about regulatory frameworks, so we have an expert on the legal side as well. So Vince, tell us about your company, who you are, and how you got into distributed finance and Web3.
Oh, Web3,
yeah.
Okay. Well, because there was nowhere else in room in Web2, so yeah. Let me into Web3. So my background, so I'm a tech guy by career. I started out working in startups almost right out of university, first doing a small stint at Accenture, or Anderson Consulting when it was called, and then did a series of startups. One of the startups, we did mobile banking in Canada in 2000. I don't know if there's anybody who wasn't born in 2000 here, but we did launch in Canada with RBC, and with the brand name was Fido at the time, and it was banking on a SIM card, actually, that was available to you on a traditional 2G Nokia phone, right? That was launched, and we also did mobile email with Fido as well, and that was pre-BlackBerry, but again, those technologies serve a purpose for a period of time, and then they go away. And interestingly enough, in that career, then I did telecom software right when mobile messaging was actually really starting to kick off and text messaging was going crazy. And then WhatsApp and iPhone came in, and actually, and text messaging was not all the craze, and it was just data messaging, actually, and using data actually in order to transmit that payload versus using the signaling protocol. But again, we were able to capitalize on that to build other revenue streams for like telecom software providers. After that, I did a digital payment system in software, and was running around around Southeast Asia, Latin America, the Middle East, and backpacking through Africa. And we were setting up payment platforms in Kenya and Tanzania, Uganda. We were all in North Africa, all the way down to Botswana as well. And that was, again, started out in 2007 in a framework called mobile money, and I understand payment systems very well. I understand, central banks very well. I understand actually what hits a nerve with them, and what doesn't, and what regulatory compliance means as well. So I came into Web3 only in 2021 after doing all of that and selling my business to Constellation Software. To commercialize a interesting technology here, which was the blockchain, as you referred to it, Lisa. But building that application that ties it all end to end. Because what's interesting, what I saw with blockchain was that it's a series of APIs, but when businesses started doing, if you remember, bring your own device, bring your own, when they used to provide you with mobile phones, now they don't. Bring your own device, bring your own data, bring your own plan. In fact, actually, I'm not even going to pay for it anymore. That's kind of what blockchain was, which was bring your own developers to build something that you want. I built this wonderful immutable database, but good luck trying to build something. And there was a lot of frustration that I saw. And so what Polymath is doing, we're bringing it all together so that it's fairly easy to license, it's intuitive to use. You could just call us up and we'll set up a sandbox environment, and off you go to the races. And its primary focus, and it's targeted actually at security tokens and regulated environments. And so we're regulation first. We adhere to the laws and the rules because, again, the learnings from central banks from all around the world, people care about their money, right? Their hard-earned money and holding on to it. And we care about ensuring that actually we build an environment of trust. So that's why I'm here, and that's why Web3 invited me.
Awesome. Lisa.
Hi, everybody. We had so much fun in our prep call, so I'm really looking forward to this panel. I am actually a developer by brain. I worked at Apple as a software developer for a long time, and then I moved to PayPal, and I was leading digital acquisition at PayPal in 2017. I was also trying to talk PayPal into getting into blockchain, and that was not going anywhere at that time. 2017, PayPal was like, you are crazy, we're not doing that. So I have a payments background as well. And so I left PayPal and I joined a little company then called BitMEX. Anybody who is in the crypto space knows that BitMEX became a very big company very shortly after I joined. Of course it was all me, but we went to hockey stick growth. We had the first Bitcoin futures contract. So I left big tech and jumped into the blockchain world in 2017. It's been 6 years. And at that time, I really thought, like, we're on the cusp of mainstream adoption. This is going somewhere. Institutions are coming in, and that did not happen. And we've had our ups and downs over the last 6 years, but having seen a lot of them, those of us who've been through several of them, see this as basically the longest crypto winter that we've had, not the end of crypto. People keep asking me in my family, they're like, oh, isn't crypto dead? And I'm like, well, not yet, not quite. A few more months to keep kicking. So anyway, here I am today. I founded a DeFi company a few years ago, doing tools for companies, institutions that wanted to come into the Web3 space. So still building that, still waiting for those institutions to come in, and also working on privacy. I'm part of a foundation that promotes privacy and blockchain. This morning we heard Alex talk about Web 1, Web 2, Web 3. Web 1 is read web. Web 2 is read-write, and Web 3 is read-write-own. And I think that's the most succinct explanation I've heard of what Web 3 is. It's read-write-own, own your own data, as Linda was saying. So that's why I'm here today.
Awesome. Adam.
Thank you, and thank you very much for having me. It's great to be here. My name's Adam Gerritsen. I'm a partner at the law firm Gowling WLG, and I'm in Toronto most of the time, other than when I'm here for sure. Prior to joining Gowling, I was with Wonderfy Technologies. I was their general counsel and chief legal officer, so saw that company through a lot of its growth cycle, TSX listing, multiple rounds of M&A, and certainly a lot of capital raising as well. Prior to that, I was with RBC Capital Markets, so I was a traditional finance or TradFi guy, so I bring that perspective in. I was the securities law subject matter expert for the bank in its cap markets division and focused on all things emerging technology as well, including the adoption of a blockchain strategy. And prior to that, I was at another big national law firm focused on the technology space, so helping tech companies grow and evolve and effectively, raise capital, do transactions, and turn that corner wherever they were looking to go from any stage of their growth cycle. And that's what I get to do now at Gowlings, again, after having come full circle, which is what I really like in getting those experiences. So I'm focused on the tech sector, fintech in particular, and leading the firm's blockchain and smart contract practice right now. So taking the experiences I learned from big traditional finance all the way through emerging growth companies to hopefully bring some value to lots of entities that are operating in this space, that are looking to grow, that are looking to scale, and looking to do a lot of different things, and how to do it in a legally and compliant basis. So I think we'll talk about that a little bit today as well. Thanks.
Absolutely. That's going to give us widespread adoption. All right. We're going to talk about DeFi today. And I just checked, and the total value locked of DeFi is $45 billion. So from a term that was only invented in 2018 to the highs we saw in late 2021, I think it was $180 billion of total value locked. Then it lost about 80% of its value, and we're at 45 billion today, and it's actually gone up from about 35 billion a month ago. So we're on the upward track again. So let's talk about who some of the users are in DeFi. What are they doing? How are they? What do they value? How are they creating value? So let's start with you, Vince.
Some of the users.
Yeah.
I can reflect on actually who some of my users are, and then
Sure.
what they're trying to attract as well. So some of the users are for Polymath are the traditional people. Actually, those people that are typically publishing REITs or managing funds as well. And it's this community of people, and it's interesting because it's like there's a community of people that don't understand that community underneath us, right? And it's like, how many people have kids? Do you understand what your kids are thinking? Do you think your kids are going to actually invest the same way that any of you do? No, right? And so these fund managers, they understand their fund, and they've got gray hairs as well, and they want to be able to talk down to the Ethereum millionaires that are out there. There's 33,000 of them. So how can we actually help them invest their funds? And do they want to be able to invest in a fund via ETH or via Bitcoin? So right now they're on the outside, but they're not being included on the inside. But these fund managers are realizing that they need to start growing up and to start speaking the language of DeFi, but also being inclusive and including actually traditional crypto actually as a currency of investment as well. So we're seeing traditional assets being introduced to a blockchain, being tokenized, which is our area of specialty, but then being inclusive with the investors that want to invest actually via this new technology that are embracing it as well. And so we're creating that inclusive environment, and so it's bringing everybody from different parts of the spectrum, or the traditional guys that understand it, that are wary of it, but really leveraging that whole framework of trust, right? That
Right,
you trust it.
institutional mostly. Companies.
Institutional, but there's also startups as well. Like
Yeah.
one of our customers that happens to be a project, or It's a Norwegian firm that's building a health and wellness spa north of the Arctic Circle, and they're using our platform to fundraise, right? And it's very interesting, you know, customers like that I'm like, I can support you, I get you. And they're doing a fundraising that's registered with the SEC. So we ask each of our customers, are you working with a lawyer? And if you're not, we know some good lawyers. Matt's a good lawyer in here, right here.
I'll throw myself out there as well.
There we go. There's a good lawyer on stage with me. Oh, sorry. So introducing them to our network of participants and people that understand that, but then also making sure that everybody's doing the right thing and in a regulatory framework first.
Yeah, that's great. And what a background. I mean, Polymath, you were one of the true innovators and then pivoted and
yeah, that wasn't me.
Right.
I came in 2021 to pivot and continue, and we're continuing to pivot, right? So, you know, where we are today will be micro pivoting actually as we go.
Excellent. How about you, Lisa?
I would say a year ago, the users of DeFi were a lot of retail people, a lot of, well, we sometimes call them degens, but you know, just retail people who wanted to get in on this new craze. And that's really shifted over the last year. What we see now is that, and we have a kind of a lens on what's going on because we're at the transaction level, we're doing analytics on all the transactions. So what we're seeing now is a lot more automation. We're seeing market makers who have quants writing algorithms, and they're looking for those alpha opportunities, looking for those arbitrage opportunities, and they're getting thinner and thinner. And I think that's going to continue. There's not very many retail traders in the market today. We're seeing a lot more institutional players, and that's going to continue. I don't see that, even what you said about your customers. It's the companies. It's B2B. DeFi is, I mean, the dream of DeFi was that everybody could be a bank and lend out money, right? I wish that were true, but I'm not seeing that to be true. I'm seeing it being more and more professionally driven. So that 45 billion, it's really professionals who are getting the profits now.
Yeah, and Adam, how about your perspective?
Yeah, that's very interesting. So I definitely echo the comments as well. I think, you know, from my perspective, when we think about DeFi, it's very difficult to pin down a definition, and I think the definition is really evolving. And I think a lot of the ways people start looking at DeFi is more on a spectrum, right? You talk about peer-to-peer transactions, and like you said, I think a lot of retail adoption spurred the movement, but I think now we're seeing kind of a reclassification of what the peer-to-peer really is. And that doesn't have to be retail to retail, that can really involve institution to institution. And to me, you know, on the definitional side, it you know, goes with the legal background, but I also happen to be a professor at the University of Western Ontario, and I teach about blockchain, digital assets, law and policy at the law school. So we focus a lot on definitions, and it's really tricky to get that concept down. But when you think about the types of institutions that look to engage in the DeFi space, you know, you do have to bring it back to at what level are they regulated and how does that integrate into their existing traditional frameworks. So when we think about that spectrum and that definition, you know, you look at the various entities that can interact along that spectrum. It's a lot easier for retail to get into the space because you don't have that many rules and restrictions governing your behavior and how you operate. Whereas on the other end of the spectrum, you have very large globally systemic financial institutions. So it does take longer time for adoption. So to me, it's always a question of where are we on the adoption scale? And it's definitely going to start with retail. And the more you start seeing institutional come in, even at the moderate levels, you know that there's that waterfall effect happening.
Interesting. So following on with that, then how would you, like DeFi specifically, how would you define, you know, where we are in Canada in terms of regulatory frameworks? Like it's been said that DeFi is regulation is going to be happening later in DeFi versus other areas of Web3 and blockchain. So let's get some perspective of Canada, perhaps.
Yeah, for sure. So the cycle of regulation in the Web3 space, generally speaking, hits from the international level down through to the domestic level, right? So generally speaking, international standard setting bodies like IOSCO, the International Organization of Securities Commissions, set out broad principles, and those get cascaded down into domestic regulators, like in Canada, the Canadian Securities Administrators, the OSC, the other provincial regulators, right? So those types of regulations are existing at that centralized trading platform level, right? The CTPs that are regulated by securities commissions. That was sort of wave one of regulation, right? You're starting to see more regulation come in around stable coins. So that's bleeding more into the DeFi space, things like that. What we're seeing now is policy statements coming around DeFi from international regulators and from domestic regulators in Canada as well. So one of the leading, I'll call it policy statements or really information statements that's been put out is by the Quebec securities regulator, the Autorité des Marchés Financiers, the AMF, and they set out a general guidance document around what DeFi is, trying to get some definitions around the topic and how they think they're going to approach tangible regulation. So not the rules of the road, but here's how we're thinking about writing the rules of the road. And the AMF and the OSC and other Canadian provincial securities regulators are members of the international organization, and they help write those policy statements as well. So later in 2023, we saw the international standards bodies start writing some of the proposed ways of thinking, the policy statements about this is how the rules of the road are going to look for DeFi. And it's challenging. It's a lot more challenging than it is for centralized platforms that operate in the Web3 space that mirror traditional financial institutions in their operating models. But what you're starting to see from these regulators is they're continuing to try to apply traditional concepts into the DeFi world. So who are the actors? Who are the ones that control protocols and platforms? Who've got more say in a DAO, for example, who's able to control that voice? They're going to start looking for actors, and they're going to start looking for individuals to regulate. That's the forecast for regulation.
I would just have a follow-on comment about that, which is that it's fine to have a clear regulatory structure, but then people who are actually building platforms and protocols and projects within Canada and within the US, but especially within Canada, if we can't get bank accounts for our projects, it's kind of hard to actually make the project work. And that's what I found to be really difficult, is that even if there is a clear regulatory structure, the banks don't necessarily want to deal with anything around crypto. And I found that to be really a problem in Canada.
Mm-hmm. Okay, getting back to traditional financial institutions, I was wondering, Lisa and Vince, if you could give some perspective on what are they looking for in terms of traditional, what are they looking for in their adoption, I guess? What kind of traditional concepts are they looking for when they're applying distributed technology to the products and services and efficiencies that they're trying to achieve in their organizations?
Yeah, so first of all, compliance. It's very difficult to comply with money laundering laws, anti-money laundering laws, I guess you'd call them, when you don't know who the counterparty is, and in DeFi you don't know who the counterparty is. So some way of being compliant is what they're looking for. They don't want to get into trouble down the road by doing something now that seems okay, but it turns out to be not okay. So regulated liquidity pools or KYC liquidity pools or something like that is necessary.
Yeah.
And then the ability to maintain privacy is also necessary. If you're a large fund and you're trading, and everybody can see your trading strategy and reverse engineer it from what trades you actually made, DeFi is not going to be attractive to them because and people will know what they have in their coffers and how they're trading it. So some way of doing private transactions is necessary as well.
Okay.
Yeah, and I guess from what we are seeing is that there's a lot of banks that are experimenting with private versions of blockchains. So they're dipping their toe in the water to really get an understanding of what can this technology do from them from an optimization point of view. And what we've seen in some markets as well is that if you look at Singapore and Korea, they approve distributed ledger technology in order to power, platforms or security tokens and private issuances, and even on the public issuances as well. But they must be, running behind a walled garden, so a private implementation. And what we've done is we've taken an approach that's slightly different, where you've got private chains, you've got public chains. We're a public permission chain. Everybody's KYC'd. All node operators are regulated entities. They have to be a bank, an insurance company, a broker-dealer. They have to report to a higher power. And we've had node operators that have lost their license and they're booted off. And so, in some way or another, there is governance around what we're doing. But that is, and some can say, well, that's not truly DeFi. Well, it's DeFi by invitation, right? And through application. And if you want, this truly adopted, then it's a necessary evil in order to satisfy the need for technology to optimize markets and to identify with efficiencies. And what banks are looking for is efficiencies. That's what everybody's looking for. Like when especially with money transfer, if anybody ever sent money with Western Union or MoneyGram, the number of hands that take place actually over time, right? It's just astounding actually. And all somebody wants to do is just send money from their parents or from where they're working in a developing nation to their parents, right, to home to pay the rent and their bills, and they're giving away 10 to 15 to 20% for what? For the middleman, actually, because he's got to earn a living.
Yeah, how true. Okay, so let's switch to the roadmap for adoption, and maybe Adam, from your point of view, from what you've seen with some of your clients, what are you seeing in terms of the major players of DeFi, of traditional finance? What are you seeing in terms of emerging new companies and protocols and retail users in the DeFi space? How are you seeing this roadmap of adoption playing out?
Yeah, thanks. I just want to pick up on some of the comments that the other panelists said, because I think they were great comments. Thinking about that roadmap and that spectrum, that waterfall effect, when you think about the bigger players, the more traditional financial institutions, they want to play with the technology before they get in. They're not going to be the early adopters, right? So that's a slower moving vehicle at the end of the day. But it is right with tokenization. We've seen tokenized gold recently, tokenized bank deposits, issuance of debt securities in particular on digital platforms, on these blockchain platforms. So that's becoming the sort of primary use case in TradFi, is effectively private liquidity pools that are now becoming interoperable with one another through networks of networks, whether that's through HSBCs, RBCs, JP Morgans, that sort of thing. That's definitely, one end of the spectrum. And when we think about access to banking, because I do think that's a key aspect, I'm fortunate enough to be a member of the Canadian Blockchain Consortium, and I sit on their Access to Banking Committee. And when we talk to the individual institutions and how they think about banking the emerging companies that are growing in the DeFi space and the Web3 space more broadly, one of the key components that always comes up is transparency. So, what are your operations? What are your protocols? What does your stack look like? Is your camera on when you're talking to us to try to get an account, right? You have to be present, you have to be available, and I think that lends into the question of adoption and how that's going to be, right? Is it going to be, one that's very transparent and open, where you've got more visibility towards integration, or are you looking to build an organization or a project to target a certain audience? Right, so that kind of leads me down to the other end of the waterfall, where a lot of DeFi protocols and players and some of the clients that I represent, they structured their company and their organization in a way that seems to cater to a particular niche retail type audience. And at the same time, they're saying, hey, why are we not getting access to banking and being more, in the conversation with traditional finance? And when we talk to the traditional finance players, they say, well, we need to bridge that transparency gap. But at the same time, we need to be able to interface, and we can't advise the actual end DeFi or Web3 growth company. That's not the role banks play. So that's where lawyers come in from an intermediary perspective. I've built the policies, I've seen that side of the wall, I've lived and played in the DeFi and the Web3 space. So being able to bridge and create that waterfall effect down is one of the ways that I can certainly help in this ecosystem, and I think that's how that's gonna play out. Yeah.
Does that same transparency requirement apply to Web2 businesses?
Less so, but yes, that's the mantra. So those should be the same requirements that are being passed along. The challenge that is created with Web3 businesses is on the AML side, but it's not necessarily just Web3 companies, it's money services businesses and PSPs, where banks have to rely on the compliance department of their end client. So getting that level of trust and transparency focused on compliance is one of the key things for access.
Oh, great. And so along that same theme of roadmap for adoption, perhaps we should talk about some of the issues that you're encountering when you work with these traditional finance players, and like how are they approaching this? And are these beta projects in a back room somewhere, or they actually have a roadmap? Are they actually looking at rolling out these commercial products and services? And what are you seeing there, Lisa?
Well, institutions are very slow to jump in with both feet, for sure. I think what they're looking at now is they're getting pressure. I mean, with the BlackRock ETF getting closer, with Bitcoin going up, they're getting pressure from their clients who provide, I'm thinking of a fund manager now. People who put money into the fund are pressuring them. They want exposure to this new asset class. They're seeing that ETFs are getting approved, and so this is more of a legitimate way to make money. They see the returns are higher, and so I really think that there's that pressure is what is driving institutional adoption of cryptocurrency or digital assets or DeFi. Now the problem is that there's a huge information gap. There's a huge learning curve to go from TradFi and the way that they've been used to investing into this decentralized finance. It's such a different paradigm. There's different things you need to track. There's different risk factors that you need to understand. There's attack surfaces and ways that you can lose money that they don't necessarily understand either. So there's just so many things to learn to be able to jump into this new space that even though they have that pressure, it's going to be really hard for them to actually make that first step across the chasm and say, okay, we're gonna dip our toe in. I see them doing maybe 1% of their portfolio, if any, just to try it out and try to get familiar with these new asset classes.
Yeah. And what are you seeing?
We're seeing institutions are scared.
Yeah.
They don't want to be the first mover, although they may be experimenting. They want to ensure that somebody else has actually done the heavy lifting before them. And they're tough conversations to have, right? Well, who else is doing this? Well, we can't tell you, right? So, our approach this year has been, okay, we want to work directly with issuers, people who have got assets that definitely just want to tokenize them. They've got a problem that they want to solve, and everybody has the same problem. It's operating capital, right? They want to raise a fund, or they've got an existing operation. They want to raise some money against it, not lose control, but then continue to, to build and scale. And so those are the perfect type of customers, and they're the early creators that we're starting to see that are taking a risk at going down this path. And then we also have the conversations with those people that they want to take the risk, but they also don't want to do the right thing, which is, those guys are, those conversations end pretty quickly as far as, can you send me your CIK number, actually, that when you've registered with the SEC, for your fundraising? I don't have one. Well, when you do, please call me back, and then we'll activate the platform for you. Because that, again, is what everybody doesn't. Nobody wants to be actually on the front page of Coinbase or not CoinDesk. As far as that's the platform, that's the technology that powered this illegal activity. Absolutely no.
Yeah. So that just really speaks to the disruption that's happening, and banks are having to deal with this disruption. How can you build that trust with them? I mean, how can we make them sort of more open to this type of technology, and how can we eliminate the friction caused by this disruption? Do you have any comments on that, maybe Adam?
Yeah, find yourself a good lawyer, and somebody who speaks traditional finance, because if you're going to be looking to enter that world, you need to know how to have those conversations. And you know, a lot of native projects, a lot of startups, you just don't have that experience, and there's nothing wrong with that. But again, you are trying to hit a target that's going to be opaque, and unless you've got somebody who's able to, you know, give you some advice or assistance in there, you're going to be throwing darts at a wall because you're not going to get insight into what are the policy considerations at traditional financial institutions just by talking to them. So they're just going to send you back until you get there. And a lot of areas are no-fly zones right now, right? Like one of them for traditional financial institutions is really holding certain types of cryptocurrencies on balance sheet, right? Again, I was talking about the international regulatory framework. Banks have, you know, capital allocation treatment, and these are deemed to be too risky right now. It's going to cost too much capital for the banks to hold these. But what they can do is hold stable coins, and what they can do is hold tokenized traditional assets and not have negative capital allocation treatment. So that is definitely an area that you could focus on if you're looking to get into that world.
Yeah, great.
Institutions are made up of people, and people have to change their minds in order for institutions to change their minds. I would say that like this event here, I'm really proud of this event. Being a Canadian and seeing that we're doing a Web3 event as part of SAS North, I mean, Ethereum was born in Canada, right? We have Zapper here, we have Polymath. We have some really great companies in Canada that are, and I don't want to just pick those two, there are others that are Canadian born, that are really pioneering and pushing that frontier forward. We have the Tapscotts. We have Don Tapscott, Alex Tapscott, who spoke this morning, really pioneers in blockchain. So I think it's just about having these conversations, figuring out why people are so excited about blockchain and its potential in the future, and then having these events, having these conversations, and really moving the agenda forward and moving the education forward for regular people. That will bleed through into institutions, in my opinion.
And I think everybody in this room is helping to move the needle for sure. You know, the work that everybody's doing with either regulators or with institutions as well. Like we're gonna grease the runway, or foam the runway for an institution to you know, ride our waves and everything that we're doing here. So at some point in time, in 5 or 10 years, they'll say, "Hey, look what I've done." Well, how about the early innovators that actually created this environment as for you? But I also think there's also an environment where people are taking advantage of an opportunity as well, where it's like, oh, you guys are doing blockchain, or you're doing crypto. Oh, you know, my fee is like 10x. Why? Why is it 10x? Well, because actually you're an unknown area, and I'm applying a lot of insurance, you know, to my invoice. Well, that's also doesn't really work actually for the industry as well, because now you're pushing back against people that are trying to push forward.
Yeah, excellent points. So I love this question. We're going to talk about crystal ball. And let's start with you, Adam. Since what the regulatory framework and advancements there are so important, what do you see in the next 5 years or so? You know, where will the industry be?
Yeah, great question. You know, there's more regulation coming, and it's coming in the actual DeFi space, and that's just going to happen over the next 12 months, 18 months to 2 years. It's going to cascade down internationally. You know, areas that are already regulated, I think, are going to see greater levels of adoption, and I think that really is a driver, whether it's more retail adoption or whether it's greater institutional adoption. Because I think the way the ecosystem works is both top down and ground up. So it's like the stalactites and stalagmites in a cave underground. Not that that's necessarily the best example, but they will touch eventually more and more points and come together. So I think that you'll see that happen over 5 years with regulation as a driver.
That was a great answer. I don't know if I can top that. I think that we'll see something like what we saw with the internet, where it was everyone was suspicious of it, and then now it's just a part of everyday life. I hope that we'll get there faster because there's an acceleration of technology. So in 5 years, I hope we won't be having these conversations about, oh, but isn't crypto just used for crime? It'll be just part of the conversation.
Maybe we'll be at Web 3.5 by in 10 years' time.
That would be good. Web 4?
We're still trying to get to Web 3, so I think we're still at Web. We went too far, and now we're at Web 2.5, so we're making it usable.
Okay, so I'd like to just talk a little bit about some of the challenges that you find developing your company, advancing your company in this really new space. We talked a little bit about that, banking relationships, and can you talk about some of your challenges, I guess, and how you've dealt with them as founders, CEOs?
We're facing headwinds, so it's just a matter of getting up every day and saying, okay, I'm gonna put on my armor, I'm gonna take some more steps forward. It takes a lot of determination to be in this industry.
Yeah, you gotta have tough skin.
Pivot. You have to pivot.
Well, you got to pivot, but you also have to listen to the market as far as what they want. You got to ensure that you're attracting the right group of people to your industry and to into what you're trying to do. Ultimately, like, technology solves problems, but if you've got a technology that doesn't solve a problem, well, no one's ever going to need it, and you'll be working against or swimming upriver actually forever. And I think it's really important that the market leads us where it needs to go, right? And we know where it needs to go, right? And 2008 was kind of that signal as far as, well, that's what could happen actually if the industry continues down the path that it's operating today. And we need to get to a place where your money and your funds and what you've built as far as your personal wealth remains with you and it doesn't disappear overnight.
Yeah, great. And you certainly work with lots of interesting companies. I'm sure that dealing with the regulatory aspects of them is one of their biggest issues. And what are you finding?
Yeah, I will echo the comment about problem solving, because I think that really is important from a business case. Particularly, I got a lot of clients that say, I'm looking to raise funding, I'm looking to talk to private equity and venture capital. And when you start having those conversations, it's really around, what's your idea, what's the problem that you're solving, and how together are you, where are your corporate records, what does your cap table look like, what are your documents like, how have you signed your intellectual property? Like, those are really important things to think about early on. The earlier on, the better, for one thing. And also on the regulatory side, regulators are looking at the space, they're looking at it closely. So I've had clients that have come to me that have been farther down the road in their project. They've had to pare back some of the enthusiasm to help it to be in a regulatory compliant place. So if that's the way you're looking to structure your business, it's better to get advice earlier on so that you're not building something you have to eventually pivot backwards to get to that regulatory compliant place.
Yeah, great. Let's talk about where you see white space in the DeFi industry right now. I mean, I'm sure there's a lot of it. Where, like, for founders that are very interested in this space and imagine themselves starting a company down the road, what areas do you think we still need solutions to or for?
There's a lot of stuff to build, and the challenge that I see that we've had is that people want to build competing technology rather than collaborative technology. And what makes more sense is to find a specific problem and solve that one problem, then work with other people who are solving the rest of the problems. So there's lots of little things to be solved, but there's tons of white space. It's a very early industry still.
Yeah. How about you?
Yeah, there's a lot of old school, like, tokenizing real estate could be really easy if the land registry was run on blockchain, and we can just point to the registry of who the owner is. Right? It'd be so simple, but yet the land registry doesn't run on a blockchain. Right? So it just makes life all that much hard and all that much difficult. And as you start to look at different problem areas or businesses as well, you think, oh, this could. If only that was happening, then my life could be easier, or my technology could be easier. But instead, we run around and we have to create, these specific structures from a legal framework because the back-end system isn't operating in that way. So that goes on actually as far as like other things that can be run on blockchain, right? The driver's license bureau. There's like so many like pick actually your government actually office. Why isn't any of that running on blockchain?
Yeah, true. And what have you seen from your vantage point of working with many companies? Where do you think there's white space?
Yeah, I mean, why my notary stamp is still a stamp on a piece of paper, not an NFT, is insane to me. And I think those are the sorts of things we'll get there with eventually. But, you know, at the end of the day, DeFi, it's got the Fi component, right? And that's the driver. So, you know, if you're looking at white space, my advice, and not that anything I'm giving up here is legal advice, by the way, is to think about the financial side of it, right? You're look at the traditional financial industry and say, where can we do things better, right? Like financial institutions, big players, unless they've got a really strong venture arm, they're not necessarily building in this space, they're not developing, they're not testing. So if you can find spaces there where, you know, the traditional players aren't, and show, you know, demonstrate a minimum viable product in a use case that has greater, you know, availability to be adopted in a lot of different places, because so much of it is integrated. I think that's where you can find white spaces, is looking how to the traditional Fi, as it were.
Yeah, good answers. So I think do we have a little time for questions from the audience?
I think
or are we out of time?
We're over.
We're over time, okay. So, I guess that ends our session. Our speakers will be around, I think, for a bit for anyone who does have any questions. Thank you very much for your attention, and I guess have a great evening, everybody.